Move over smashed avocados and lattes. Australia's got a new obsession. The fastest growing retail sector now isn't cafes, isn't restaurants or even liquor. It's actually wellness. Hi, I'm Michael Yardney and welcome to this week's Demographics Decoded podcast, where we unveil the trends shaping our futures. Today we'll explore the demographics driving this surprising trend in today's episode of Demographics Decoded with leading demographer Simon Kirstenmacher. Hi, Simon.
Hi, Michael. Good to be on and good to be talking about activewear today.
Well, when you think about Australia and what we spend our money on, you might picture the famous cafe culture, brunches, white lattes, flat white smashed avocados. But the data tells a different story. In just 6 years, Australians have spent an astonishing $36 billion more on health and wellness than on cafes. Wellness now seems to be outpacing our cafe obsession, Simon.
It well and truly is. And the culprit, of course, is no other than pure and simple demographics at play, as we will uncover.
You always bring it back to demographics, Simon, but that's why I enjoy our chats, because this is useful for business owners, employees, whether you're looking to see what your career is going to be, and even for investors who are curious about what's ahead for Australia. So I think this is going to be a great conversation. But I've got to admit, I always thought coffee was Australia's natural fuel, but apparently the numbers say wellness is our new caffeine.
Well, coffee still remains at the top of the list for many people. But in terms of
Me.
and me, but ultimately the spending data, when you think about how much you spend on wellness and what that actually includes, is absolutely massive. And we now have more and more people being pushing into the wellness lifestyle phase of the life cycle. So we have the youngest baby boomer at 61, the oldest baby boomer at 79. What do you spend your money on in retirement? It is lifestyle, it is wellness, it is health. And the wellness and health spending, they are linked, or wellness spending can be seen as a precursor to future healthcare spending, or to avoid future healthcare spending by spending time on your Pilates class, which includes activewear, which includes gym memberships, which includes water bottles and whatever it is. You do all of this to stay active for longer.
Yes, well, I guess baby boomers are interested in that. See, the data showed that pharmacy sales were up 57%, far ahead of cafes, liquor, or even recreational goods. I guess this has got to do with our aging population, Simon.
It is definitely linked to the aging population. It is also linked to a bigger awareness of something like mental health. Pharmacy sales go up if you have more people on antidepressants, for example. But of course, pharmacies, if you've ever been to a pharmacy, you do know this. Pharmacies are stacked full with protein shakes, with delicious muesli bars and supplements of all sorts, whether they are snake oil or not, that are meant to make you live longer or at least healthier.
Well, when we look at where spending has changed over the last 6 years or so, interestingly, and not surprisingly, newspaper and books are selling about 30% less. And while we are spending more on clothing and liquor and cafes, actually it went up 51%, cafe and restaurant and catering spending. It really was pharmaceuticals, cosmetics and toiletries that grew significantly.
Yeah, and I love the fact that the newspapers and book sales are down, to the surprise of exactly no one. It's probably the reason why, while I still write a column in a physical newspaper, I jump on this podcast bandwagon to make sure that
People are getting their information very differently, aren't they?
changes. And if you need to go to where the audience is an old publication truism that we see reflected there. But it's also because if you think about podcasts, they are a lifestyle thing. It is hard to read the newspaper while going for a run, while being in the gym or something like this. But that's what lots of people, me included, do when they're in the gym. So that's it fits into this new lifestyle thing, if you will.
Well, I think wellness is now viewed as an investment, not a luxury. Being a baby boomer, I've changed to look at more of that as well. So I guess demographics has got a big part of it rather than just consumer fashion.
Yeah, absolutely. I think this comes bit by bit. It comes back to our absolute obsession in Australia with life lifestyle. We want to live active, interesting lives where we consume a lot of stuff. And to do this, you need to be reasonably healthy. And you understand that wellness is an enabler of this lifestyle as you move up the age ladder, so to speak. And baby boomers are now, if you compare baby boomers to people that 50, 60 years ago were of their same age, they are a completely different consumer. They live much healthier lives. They're much more likely to buy the fancy New Balance or On Cloud shoes to walk or to wear Lorna Jane or whatever they're called. Activewear things. It's a new thing. You dress differently, consume whole different consumer products. You go to classes that were unthinkable for retirement age populations to visit just a couple of decades ago. Yeah, and then the consumer data reflect this. And of course, the companies that are servicing the wellness sector, they are adjusting for it. They're making sure that activewear is not just for the super sexy 27-year-olds, but they are for the whole population.
Well, I see that in the suburb I live in Brighton and in Church Street, where I sit every Saturday morning with Pam and have our brunch with our dog Lincoln. You see the people in their Lululemons and the Lorna Janes and their sneakers, not just the young teenagers anymore, but all age groups. So it has become the fashion in some ways.
Exactly. And the fashion is just a reflection of what we value. We dress according to what we value. When we say, oh, back in the day, everyone was wearing a suit on their Sunday outing. It's like, yes, but that's because you want to reflect a certain image of being put together, of being respectable. And now you want to show that you live an active lifestyle. This is something that you want to show to the world. So you wear activewear not just while you are doing the exercise, but also on your way to the exercise. You wear this outfit out. It's a reflection of our collective values. And it's neither a bad thing nor a good thing. It is just a wonderful window into what we value as a society.
Well, just thinking about my friends and even what Pam and I are doing, we're investing in our wellness to delay or reduce the challenge of problems later on in life. I guess baby boomers have become more aware of it. It's an insurance policy in some ways.
Absolutely. And baby boomers are, of course, aware that they will live long lives. The idea of seeing somebody who reached 80 back in the day, you would have gone like, oh, Lord, this is an ancient person. I can't believe you do this. Now, median age of death is 85. That means half of us will reach 85. That is huge, and that continues to climb up this number. So you must prepare for it. And baby boomers hate the idea in the most understandable way that they will live their long life in a poor health. Where they go, why bother? Why bother then? And so you are more active than previous generations now as a baby boomer to actually prolong your healthy lifespan. And that is a wonderful thing. That is very, very good on average, especially, again, bringing this back to simple demographics, considering our looming aged care shortage. I want baby boomers to live long and independent lives without care, because I know for sure that we don't have enough aged care workers in the system in the future to look after everyone.
Now, I know a lot of business owners and professionals are listening to our podcast or watching it each week. So not just the healthcare industry and wellness industry that's grown. The statistics show over the last 6 years or so, economic spending on cafes grew 51%. Interestingly, liquor 46%, recreation goods 52%. Can you draw any trends out of this? Where does liquor fit in with with all that?
I think part of the spend there is that we consume less beer, cheap stuff. We consume more expensive stuff, wine
Interesting.
and so forth. I would love to see whether we actually spend on hard alcohol, whether we spend less money on hard alcohol now. I think gin and tonics are, and Aperol spritz and whatever, they're still very, very popular, but it is moving to wines, a lower alcohol beverage where you drink less. Because overall, I know that the alcohol per liters consumed per head of population, that is going down. But we move up market. And once you move up market, prices escalate, spending escalates, which, you don't care where you make your margins if you are a liquor store. That doesn't faze you. But it's nice to see what we do. So we say that money is becoming a bit tighter, but because we are so obsessed with lifestyle, The things that we are not slowing our spending down on is eating out, is spending on liquor, is spending on wellness. This is the stuff that we do really care about. We'd much rather delay the purchase of a car. We much rather cut down our holiday spending instead of giving it up. So instead of spending 4 weeks on the west coast of the US or something, we'd say, hey, 4 weeks in Bali, that is saves me money, and I can then still have the lifestyle utility, so to speak, and have more money available for other lifestyle stuff. Is on Australia lifestyle, lifestyle, lifestyle. This is what we obsess about, and it's comical how bad things need to be, economically speaking, in Australia to see a slowdown in cafe spending, in eating out. Other nations react much sooner on these kind of luxuries than we do. We love it.
Also looking for that in our accommodation as well. I know that estate agents are reporting that premium houses continue to include pools, spas, sauna options, and even places to have your Pilates or massage. And we know that the more luxurious apartment buildings have their gyms inbuilt, don't they?
Absolutely. Just think about something like the insane amount of houses in Australia that have a pool, which is a lifestyle benefit, but it is also a financial cost. And it
Yeah.
is time out of your day that you need to manage this darn thing. And so I'm utterly surprised by how many people want this in their house. It's very, very hard in attractive suburbs to find a house without a pool because it is such an essential addition to the lifestyle obsession of Australia. And that's what we want as people. As soon as we can afford it, we want lifestyle. And of course, we're all in certain ways cost restrained because none of us has unlimited funds. But within our funds, people want the maximum of lifestyle. It is much less prestige in Australia compared to England, for example, in terms of spending, but we want the lifestyle stuff. Prestige, not so important. Lifestyle, that is ultimately our main obsession.
Simon, is this just a post-pandemic blip after being stuck in Melbourne, where you and I are at our homes for a long time and creating gyms in our garages? Well, I didn't. I know, I know one of my sons did. Is this just going to continue into the future?
No, I think this continues. I think this isn't changing. We see this wonderful. We'll see a slowdown because at some point this big wave of baby boomers will become more limited in their movements. But that's not for another decade. So for the next decade, we'll just see these consumer wellness spending type things go up and up and up. Once you move into this really late stage of life as the baby boomer generation, and then spending slows down, or at least that it always has with the previous generation. God knows what the baby boomers have up their sleeve, but it should slow down. We would expect it to slow down a bit. But for the next decade, I would say lifestyle spending continues to rise in Australia, especially also since we take the millennial generation into the highest spending phase of the life cycle, the mid. And yes, money is tight. Yes, you need to make decisions what to spend it on and what not. But if the biggest generation ever, millennials, move into the highest spending phase of the life cycle, you ultimately also end up more or less accidentally to spend more money on lifestyle.
Well, you consult to businesses, organizations, government authorities. I guess that you would be suggesting there's room for businesses to look for opportunities in this space moving forward. Before I ask you more details about that, maybe you can just explain what your day-to-day role is when you're not doing podcasts.
Well, we're trying to put ourselves in the shoes of our clients as the demographics group, or myself as a presenter at a conference. I try to figure out who are the people in the audience, who is the business, how do they make money, what is important to the organizations, if it's a non-for-profit, if it's a local government area or something, and then we show them the world through the demographic lens. And if you look at the lifestyle argument, it's pretty simple. You go like, well, where do you sell those products? There is retail outlets there. We see this that where do you buy wellness stuff? What is that? So we see, well, the big retailers, and this could be a pharmacy, this could be a supermarket. They now open up whole aisles for
Yes.
protein, for vitamins and so forth. That goes up. We now even see the first forays of this kind of spending into gas stations. Go to any 7-Eleven, go to any BP shop there. They have not just Monster energy drinks, but they have healthy juices. They have protein shake, milk kind beverages. They have much more healthy muesli bars next to the Kit Kat and Snickers there. So that is on offer. Healthy nut mixes are in every gas station nowadays, not just a unhealthy sausage roll or something like this. We are seeing this change. We're seeing reactions to these demands, even in a humble gas station.
I'll leave a link to the demographics group and how to get in contact with you in the show notes. So if people would like you to help their organizations, their businesses with your consulting services or speaking services, you can take advantage of that. I guess if I'm trying to put it in a property perspective from our team at Metropole, with people living longer and living longer in retirement, I guess one of the questions is what's going to fund that? And that's why I think it's really important to expect to live longer after retirement, often 20, 30 years, and you can't count on the government pensions and maybe not even on your superannuation. So if you're trying to build into generational wealth, we at Metropole will help you with property and wealth advice. We don't sell any properties. We're much more than a buyer's agent. We help our clients safely generate, grow, protect, and pass on their wealth to future generations through strategic property and wealth advice. I'll leave a link in the show notes, and why not have a chat with the property strategist at Metropole? It's obligation free, and it's a great time in the cycle. We've got a whole lot of factors, including all the demographics, that are going to keep driving our property markets moving forward. So, Simon, there's lots of exciting things happening, but there's also some areas that are not growing as much. We talked about newspapers and books, but also general retailing hasn't grown as much as these wellness things. I guess more people are buying online as well.
Exactly. So in the retail spending data, usually it's just the source of purchase isn't included. So whether you buy a bag of protein powder online or in a store, it is retail dollars spent. So it's the same difference. But retail as a whole is growing slower, and that's because money is tight. So we do try to slow our spending. But we call it the wallet shift. Where do you shift the money within your own wallet? What do you spend it on? What do you save it on? And the lifestyle stuff, as I mentioned before, we don't want to touch this. This is why we live in Australia. We go, well, we want to have a bit of fun. Why not? And so you'd rather slow down spending on boring stuff like flooring, carpets. Maybe you don't need to immediately update some sort of appliance in your house. You can procrastinate with this. So ultimately, then households need a new washer dryer unit. They keep the old one for a year longer or so. That slows down the spending there. But lifestyle, heck no, we're not touching it.
Simon, I know you love bringing everything back to demographics. How does this change in how Australians are spending their dollars connect to demographics?
Well, there is a certain life cycle logic to spending. You know this, that in your 20s as a poor student, you spend money differently than when you are on a high income, because as a student you have no money, but you have heaps of time. In your 40s you might have heaps of money, but you have no time, and so forth. And so that balances out. You have, of course, a different life stage that you're in. So you might have kids to spend money on and not. So that changes things. And so demographically speaking, it is interesting to see in which kind of life cycle phase the biggest or the smallest generations are in. So for the next 10 years, we push the biggest generation of millennials into the mid-40s. So that is when you have relatively young kids, when you are beautifying your forever home. And so this is what you spend money on. You fill your house with crap. So all those Harvey Normans, Bed Bath and Beyonds, the IKEAs, they have the best decade ahead. Then you have the baby boomers who are now moving out of the world of work. What do you want then? Yeah, you want lifestyle. You want to kind of find yourself again. What do you do now that you don't work anymore? And this is by definition almost all lifestyle, because, hey, this is my time now. I worked my butt off for 45 years or so, and now I'm going to enjoy the fruits of my labor. That's what boomers are going to do. And then you go, well, what kind of phase of the life cycle is seeing a bit of a slowdown? That is people in their 50s. That is the Gen X cohort. This is when we tend to upgrade the family home. You build the big extension or you do whatever. But this cohort, which tends to be much more sophisticated spending, that is now slowed down. And of course, it is facing a difficult decade because you still have financially dependent kids. The whole schooling stuff gets more and more expensive. You have a decade where you are now faced with looking after your parents, your aging parents. and you are also the generation that potentially overextended their mortgage during the low interest rate phase. You upgraded a bit too much. You borrowed a bit too much money for this too nice of an extension to the house or something, and so money is actually tight for people in their 50s. So we know that consumer spending targeting at this thing probably won't grow as much as it could, because it's only a small chord and the chord is squeezed for cash.
Simon, this is what I love about our weekly Demographics Decoded podcasts, that it really is, demographics really is a crystal ball into the future. If you see different age groups and you know the lifestyle stages they're going through, you can predict reasonably accurately how they're going to live, where they're going to want to live, what they're going to spend their money on. And that is very useful for business people, entrepreneurs, investors, and even for property investors wanting to understand the sort of real estate that's going to be in continuous strong demand in the future. So again, if you don't currently subscribe to this show, please click the follow or subscribe button so that you can get this type of information from Simon and me each week. To finish off, Simon, if you are advising business leaders or investors or business people who are listening to this, watching us today, what's the big takeaway from this data about how Australians' spending has changed over the last 5 or 6 years?
Well, you want to follow the national obsession with wellness, with lifestyle, and then follow the wellness dollar. Where does this want to be spent? Where do people live? And then you figure out, well, we know, for example, that we move the big millennial generation from the inner suburbs to the urban fringe, because that's where they move their families to in the next decade, because that's the only place where family-sized housing is readily made available at a somewhat affordable cost. So the millennials do their retail spending there. The baby boomers do their retail spending, well, where they currently live, because they're not downsizing at scale. So we can follow these kind of trends, and you know where your kind of wellness dollar is going to be spent. And ultimately, we can be rather confident about the trend of the wellness spending in the next decade, which is just this thing goes up. And you can be confident in growing your market, at least for the next decade and a bit. So again, I'd say the future is bright for anyone investing in Australian lifestyle spending.
Makes sense to me. So I guess that's what we've learned, that lifestyle is no longer just a trend. It is actually a central part of how Australians live, shop, and even starting to design their homes. And cafe culture hasn't disappeared, but it has been overtaken by something a bit more powerful, this national shift towards health, lifestyle, and longevity. And if the past 6 years or so are anything to go by, this trend is going to shape our futures moving forward well up over the next decade. So once again, thanks for joining us for this week's Demographics Decoded podcast. And thank you, Simon, for unpacking the story behind the numbers. If you've enjoyed today's episode, don't forget to subscribe so you won't miss the insights that Simon and I share each week. And once again, please just do us a favor and share the show with somebody else. Simon, next week I'd like to unpack another big demographic trend. While Australia's population is growing, there are thoughts that we're going to reach peak population around the world in the future. I'm not going to tell when just yet. So people have got to come back next week. But that is going to affect Australia, isn't it?
It is. Those big global shifts are going to impact our everyday life and our national policies and potentially our national business model. So there is a lot to decode next week, yet again.
Look forward to seeing you next week, Simon. This Demographics Decoded podcast has been brought to you by Metropole Property Strategists. We provide a complete range of services to help our clients safely create intergenerational wealth through strategic property and wealth advice. If you're looking to buy an investment property or your next home, why not have a discovery chat with one of our wealth strategists? Just go to metropole.com.au and explore your options. You'll find we're much more than just another buyer's agent. We provide a complete range of services, including property advisory, wealth advisory, home buying, buyer's agency, property management, renovations, and development management services. The team at Metropole will help you with frameworks that I've fine-tuned over 5 decades, and we've been helping clients with for well over 25 years. We're big enough to tip the scales in your favour, but still small enough to care. In between these Demographics Decoded shows, you can follow me on social media, and I suggest you also follow Simon Kirstenmacher. You'll find him regularly posting on all social media platforms. And thanks for spending the last little while with Simon and me. I hope you got some benefit from the show, and if you did, and you know somebody who may also benefit, please tell them about Demographics Decoded. There's a share button on every podcast app. I hope you're going to be doing them a favour, and you're definitely going to be doing us a favour, helping us in our quest to make as many people as possible aware of the demographic changes that are going to be shaping their future. And of course, if you don't currently subscribe, we'd love you to. And of course, any of the information that we've been sharing with you is general information because we don't know your specific circumstances.